Hey, everybody. Hello, Jen.
Good
Welcome to the
morning.
Victoria Real Estate Show. It is Thursday. It is October 24th of 2024. And today we're going to be talking about mortgage rates because there's a big announcement recently, and Jen's going to take the lead on that one. She knows all the numbers and stuff. But we don't have Jane here today, unfortunately, but she's here in spirit, so she's probably watching from somewhere. How are you doing, Jen?
I'm doing good.
Yeah,
Yeah, it's
good.
exciting news and positive,
Uh,
positive information in our industry. That's for sure.
Definitely. I think everybody's been waiting and waiting for like that tipping point of when do things come back? When do people start saying, okay, I'm okay now to become a buyer again because I've been, eating these, there's been these high interest rates and I just don't really feel comfortable buying yet. But
hmm
definitely the direction it's been going and and what I'm seeing on the street in terms of our business. And how are you seeing it in your business? Are you seeing a significant uptick, or I'm sure the
Yes.
conversations have really grown?
Yep. I mean, after the announcements yesterday, multiple emails this morning, people just inquiring, wanting to check in on their mortgage rate. Does it make sense to refinance now? Should we hold off? Um, yeah, so definitely an increase in activity, which is wonderful.
I'm sure you get those questions. You know, should I, change my, should I lock in? Should I this? Should I that? At all times throughout any economy, throughout any interest rate change, up or down, I suppose. Um, but now it's just louder. Is that right?
Yes. Yep.
Yeah.
Yep.
Yeah.
Exactly. Or people that have done renovations and, they've got that money on a home equity line of credit. Does it make sense, combining the two? Or do they wait till their maturity date? And yeah,
Right.
those kinds of
Yeah. Well, I mean, we should probably talk soon about ours.
things. Sure. Happy to do that.
Okay, well, let's get into the show and talk about what's been going on out there in real estate world. Just a moment here. So yes, as I said, today we're talking about that half point. 5 basis points, just 0.5% drop, and that's 0.5% on top of all the other percentage drops. But we're going to start out with just what's happened in the last week and what has happened month over month. And then we'll get into that. So in the last week on the MLS board in Victoria, 241 new properties came on market. And out of the pool of available properties that 241 added to, 159 came out of due to going pending, meaning that they reached an unconditional agreement to sell their home. And somebody was buying it. 109 properties out of that pool of properties dropped their pricing. So that ratio is a little less than 50-50 on new listings and those price drops. A little over 50-50, almost like looks like 70, 65, 70 percent of the new, ratio of listings new to pendings. 6 people chose to increase their price. Again, often that's just because the agent input it wrong. Maybe they put 999,999, but they actually didn't double check the listing contract and it was a straight million, these kind of things. Or more often, you see the property come up for 100,000 and it should have been a million. And of course, they're getting their phones are ringing off
Whoops.
the hook. I remember when I was looking for a property before I was in real estate, and every once in a while you'd see a property where they made a mistake or an error in the price, whether it was 250,000 instead of 520,000, or whatever it was. And you just you think it's too good to be true, but I got a call. um, Maybe somebody really there, folks. There's that doesn't happen. Nobody's giving away their homes for 100,000 when it's worth a million. But hope springs eternal. 7 properties came back on market. 150 transacted at the lawyer's office. One of mine happened to do that today. Yay! 50 properties expired off market. So you can add that to this, what's coming out of the pool, and 2 were withdrawn. In so far this month, as of Monday, when we do this report, Monday the 21st, there were 412 unconditional sales. So far this month in October. In October 2023, in the whole month of October of 2023, there were only 407 sales. So we're already above that. We're already, and we've got another, about a week to go with the rest of this week. So we're going to be, I don't know, maybe close to 500 sales by the end of this month. We have 773 new listings have come on so far, and that's probably compared to 1,100 for the full month of October 23. I think we're probably going to be close, maybe a little under that number for new listings. And then active listings were, fairly significantly up over last year. We have 3,209 active listings as of Monday. And last October, at the end of the month, there were 2,756. So that's that. So Jen,
Okay.
talk to us.
Well, so yes, the Bank of Canada yesterday, they cut their overnight lending rate to 3.75%, and that's 0.5% reduction. What that will translate to borrowers, or those that have a variable rate mortgage, line of credit, loan with a variable rate, that's going to be a reduction of 0.5%. So that's great news. The Bank of Canada reduced rates by a 0.25 percentage point a few times already this year. But you really notice a difference when it's at 0.5%. It translates to $30 reduction per 100,000. So a significant reduction to your payment, which is
say that number again.
$30 per 100,000.
Okay.
Right.
So a 0.5 percentage drop on $1 million property, that's the $300 less you're paying per month.
30 times 10. Yeah.
Okay.
Yeah.
Wow.
So you feel that, as opposed to, $15, these drops that have been a 0.25 percentage point, $15 per 100,000, you just don't feel it quite as much.
No.
The current projection as well is that there's a huge possibility currently, based on our current numbers, however things can change, of another 50 basis point drop on December 11th, which is the final time that the Bank of Canada meets in 2024.
So far this year, it's been over. Has it been a 1% drop total, or over 1%?
1.25 now.
So 1.25.
Yeah.
And there's speculation that in December, another 0.5%.
Yes.
So we would be 1.75, almost 2% drop in 1 year in interest rates.
Yes. So the current outlook in our real estate world is that definitely a big uptick in activity leading into the spring. There's differing opinions whether or not that's going to start in the winter. Our chief economist, Dr. Sherry Cooper, expects that we're going to have a really busy spring. With that, sorry. What do you think?
Well, I think that the smart buyers are getting ahead of it, and I've been saying that for a little while here. When you see the writing on the wall, don't wait for it to come to you. Get ahead of it, right? There's been a lot of change, and that's the direction is going in the right direction. And we've all experienced, actually, some buyers who are first-time buyers may not have experienced this, and buyers who weren't in the heat of it. But when you're in a hot market, it's not a lot of fun for a buyer. And the advantage is to get there ahead of it now, when there's actually a selection of inventory, because that inventory will dry up that we just talked about. And there's a selection of, and you're not necessarily competing for properties. But that will be gone in the spring. And I do expect there will be a People tend to follow the news, and I think once the news starts saying
Mhm.
it's really active out there, and I wouldn't be surprised if we have record-breaking, let's say December and
Mhm.
January
Yeah.
as we go into the spring.
Because what does happen as interest rates fall, house prices historically go up.
Right. Exactly. Exactly.
So, yeah, it's in specifically looking at this slide here, because the next decision is, okay, you're gonna get a mortgage. What do? Do you go fixed or variable?
Right.
Currently, where you can see the red line here, our
Mhm.
variable rate is much higher than the fixed rate, which is not
Right.
the norm. Um, the norm is historically that fixed rates are higher than a variable rate, because the idea
Yeah.
is that you're going to pay more to have that peace of mind and knowing what
Mhm.
your rate's going to be for that 5-year term.
Yes.
We're seeing now in the forecast is that variable rates are going to drop within a year lower than that 5-year fixed. So
And get back to what's kind of a normal
yes,
ratio, where again people pay a premium for the comfort and stability of knowing what their payment will be on a fixed, and
exactly.
people take the risk on a variable at a lower rate, but with the hope and expectation it always stays that low. But there's the chance it goes higher, and you're gambling a little bit with that variable rate.
Yes, and over the last few years, it's been a tough gamble.
A losing gamble. Yeah,
Yes,
yeah.
but finally,
I
it looks
I
like that's
lost that.
getting
I
better.
lost that
Oh,
gamble myself.
me too. Yeah,
Yeah,
yeah. So
yeah.
it's been frustrating. So I'm very relieved to see things getting back on track.
Okay, so this graph here, it shows the red, really precipitous drop in the variable rate,
Yes.
and then the fixed rate maybe dropping a little bit, but then starting to rise.
Yeah.
And it's showing, so it starts at today, and this slide is recent then?
This
Is a
is
recent
from
slide?
yesterday. Yep.
Yesterday's slide.
Yep.
So realistically, if things go as forecast, then definitely going variable is the way to go over the next 5 years.
Exactly.
Yeah. Okay. And then there's, I'm sure, and we already talked a little bit about this, and as you said, there's a lot of conversations happening around, is this, I'm on a fixed rate, what point should I talk about converting to variable? Should I wait till, should I break my mortgage now and change that
Mhm.
up? And that's an individual conversation for everyone to do, but is now a good time to have that conversation?
Yes. I mean, it's kind of tough right now because you'd be breaking it and your rate would be higher than what you've
Mm,
got potentially for a fixed. Um, but the balancing act is your penalty would be less, because the second rates do start um, dropping more, that penalty is going to skyrocket.
okay. Okay. Got it. So there's been a number of decisions. We've already talked about them. It's come down 1.75% so far this year.
1.25.
But we're looking
Yeah,
at
this is
1.25.
saying they're projecting the overnight lending rate, which is what the Bank of Canada sets. It's headed for 2.5%
Right.
by the spring. It is currently 3.75%.
Okay. And that's a
So
really, really significant difference.
yes,
I mean, once you're down in that kind of 2.5%, that's, there are people out there that have been paying, on fixed. What are some of the average higher fixed rates you're seeing that some people are in, and where did the variable rate get to at some points? Let's say for those folks that didn't have the prime minus or anything like that.
it was gross. Close to 7% for a variable, and fixed
Yeah.
were like about 5.89. They were honestly fixed was up to like 6.59 at one point.
Yeah. Yeah.
Yeah.
So this, with this 2.5%, we're talking, mortgage interest that is less than half of what you would have been paying a couple years ago.
Yes.
That's like, you talk half percentages and quarter percentages, but you're actually, where you're reaching is a point where the ratio is less than half of what you've been paying just a couple years ago in interest. That opens up a lot of buying power.
And the bottom piece there, the overnight rate headed for 2.5 by spring, above pre-COVID rate of 1.75. Basically, they really kind of like to cut out the COVID time, because the overnight lending rate
Mhm.
during COVID was 0.25%.
Right.
And that is not expected to happen again. That was an unprecedented time, as we know.
Yeah. So folks, don't wait for or expect we're going to get back to those 0.25% interest rates. That's not realistic. That was a really unique,
Time period.
unfortunate time,
Yeah.
and we don't really want to go back there, because having those low interest rates are because there's a cost to us from some big event that's been happening in the world. What we've got here is slightly higher than the pre-COVID rates, but still within a really low, reasonable rate. So this is good. And so what do they think happens after that April 16th? I guess that's what this one is. It might be continuing on a downward trend for 4 years.
Yes.
And then start to go up.
Yeah. Balancing out,
Okay.
After a big significant drop in the next year, balancing out, and then a slight increase after 4 years. Now, this is the current forecast, but this can change. Anything in the economy, it's amazing how this gets affected.
Well, it's just like looking at any kind of, they try to predict the hurricanes down south, and, or
Right.
any kind of weather pattern, the further out you're predicting, the more room there is for that error. But it's just,
I hope they're predicting this a little bit better than the weather, because the amount of times you look at the forecast and it says rain, and then by the time the day comes, it's beautiful and sunny, which I appreciate.
I think, yeah, more generally, they have a better overall.
I hope so.
So what have we got? This is just a really happy slide.
Yes, everybody cheering. Yay.
This looks like it was made by AI.
I think so, yes. Yeah.
Yeah. Doesn't it? It has a look, I find, the AI kind of generated stuff. Okay. So Bank of Canada, policy cut 3.75. So this is what we've been talking about. We don't need to dwell on this slide unless there's anything you want to talk about here.
That's it. They're classified this as a jumbo rate cut.
Okay. Jumbo rate cut. Okay, good. So yeah, lots of changes. We've talked about these before, but in the context of the mortgage rules and everything else, of mortgages, in context of lower interest rates, these rules also are some of the first times we've seen some opening up of mortgage rules as well. So
yes,
pile that onto the pile of things that are making it easier for people to access money again, puts more into that perfect storm of we should be seeing a busier spring. Do you want to talk us through these, Jen?
Yeah. So the first one is for insured mortgages. 30-year amortizations are now going to be available for all first-time home buyers and all purchasers of new builds. So if you're buying a brand new home, you can go up to a 30-year amortization. That helps with qualifying for the mortgage as well.
Right, because you're not paying it over 25 years, you're paying it over 30.
Yes.
So your payments are just slightly lower. Now, you said that is only for insured mortgages, though?
You can get a 30-year amortization for uninsured as well, but it's new. That's been around for a long time. What's new is that they're allowing a 30-year mortgage for an insured mortgage.
Okay, got it.
Yeah.
Okay.
Yeah. Second one is that they've increased the 1 million price gap for insured mortgages to 1.5 million. So that's lots of people are usually, or in our area anyways, that 1.1 to 1.2%. It's got a suite, but they don't have the down payment available, so they're stuck at that. They've been stuck at that $1 million cap, or buying a property without a suite. So this is going to be wonderful. I don't think we're going to see much up to that 1.5 million, but I feel that there's going to be a lot of activity around the 1.1 to 1.2. So
yeah,
your required down payment is now much less.
right. You're no longer and this has been this artificial stopping point, the $1 million price cap, where people with less than 20% down just are completely out of the market above $1 million. Now they are within that market up to 1.5 million, and what we were seeing was this drop off in kind of like a desert. Not exactly a desert, but the pricing between $1 million, $1.2 million tended to get skewed because people would come up against that artificial $1 million barrier and not be able to go above. So some sellers were coming down under the million just to get the sale, and then otherwise, it just it took some of that inventory away from that lower price point. So that's going to be interesting, and so this add-on here, it says about 20% of housing is priced between 1 and 1.5 million. So that does definitely open up more sales for those people. And in Victoria, especially, where average pricing is like around 1.3 ish, goes up and down. This is really is important for Victoria. This one.
Yes. The third one there, so it's just outlining how the down payment has changed. So up to 1.5, or between 1 million and 1.5, your minimum down payments have been 20%. It's now changing to not just an easy calculation. It's got to be it's 5% of the first 500,000 and 10% on the portion between the purchase price of 500,000 and 1.5.
Okay, so if you want it,
go ahead. Sorry.
Well, so what you're saying is you can buy with less than 10% down, but there's like a scaled sliding calculation on it. Okay.
Yeah.
So yeah, 5% of 500K, 25,000.
Yeah, and 10% on the amount above.
10% on another million, let's say. So at 1.5, that's 100,000.
Yeah.
So 125,000 you need down payment for a $1.5 million home. Minimum
versus 300,000 is the right. So big change.
Big change. That being said, you still need the income to qualify for $1.5 million. So this is really going to be for high income earners, because you still need to have pretty good income to be buying a $1.5 million home. But they don't have necessarily that down payment yet. Yeah.
Yeah.
Oh. Are you seeing like a market for that? Because I'd heard some people saying that, it won't make that big a difference because of the high income required for those higher priced homes.
I think with the rental income, like most of those, if you find a property that has a suite, it's that where I think it's going to really make the effect here in Victoria is up to around that 1.2 million, because then we're also able to use that suite income, which helps with qualifying as well.
You can still use suite income for like 1.5 million, could you not?
For sure you can. Yeah.
It just won't have as much as maybe it's got a really nice suite.
Yeah, for sure.
I might be, you might consider buying a $1.5 million home and living in the suite yourself, renting the main home out, just to get that home that you want. Anyway, there's always different ways to look at it.
I have run into it multiple times with clients that they do qualify for the purchase price, but they don't have that required down payment. So they're restricted on their max purchase price because they don't have the down payment piece. so they
Yeah.
do qualify for it. But,
Yeah. And
the
so
other
this is
thing-
changing.
Yes, yeah. So that's positive. Is that the stress test rate, of course, is dropping because interest rates are dropping. So that
Right.
will also increase purchasing power.
Right. With the lower stress test now, you can actually get approved for a higher mortgage. And, and that's what a lot of people have been waiting for as well. I've actually got a number of people out there that would love to be able to buy, but they are waiting for the interest rates to come to that point where they can now afford to do what they want to do. So yeah, again, watch for probably some pricing solidifying in this winter and into the spring. So
Yeah.
lender switches are allowed. What's this about?
Basically, when your mortgage is up for renewal, and because about a year ago, there was mad panic. It was in the news that all these people that have their mortgages coming up for renewal are going to have major payment shock. That was something. Now that's not as much of a concern anymore as interest rates are coming down. But it's important for people to know that you don't have to renew with your bank. So you go into your bank and they give you an interest rate option. You want to reach out to a mortgage broker and explore your options, because we can switch your mortgage now without having to qualify under that stress test.
Right. Because the unintended consequence of the stress test was that people were going to a lender, getting a great rate, but then on renewal, they were having to go, they couldn't shop around because maybe their situation had changed and they weren't going to meet the stress test anymore. And they were allowed to renew with their lender. They could, as long as I guess they were, not in arrears or whatever. But it was harder for them to switch. So the banks knew that and were actually, sounds like, almost overcharging people on renewal as well. Is that fair to say, or is that?
Yes. Yeah. Yeah. And then it's important to have a mortgage broker that knows there's so many different buckets that your mortgage can fall under. So there's this, this little statement here: insured and an uninsured mortgage. And what's an insurable mortgage? What is that, right? So your mortgage broker would know, or should know, that as long as your amortization is under 25 years, or 25 years and under, we can transfer your mortgage under this insurable bucket, which potentially means better rates than what your bank is able to offer you.
Right. So again, everybody talk to your lawyer. So I'll read this one. Lender switches are now allowed without the federal mortgage stress test for all insured and uninsured mortgages. And this may be extendable to insurable mortgages as well, which is what Jen just clarified.
Yeah. Okay,
so next we've got insured refinancing is allowed to build up to 3 independent add-on units to already owner-occupied homes for long-term rental. And there's some caps on that. So that's interesting.
This one I'm not really sure about. Honestly, I don't know. So I guess a recent program came out where they're trying to encourage people to build suites, providing a loan up to $40,000, I think was the cap, but you have to rent the property under market value. I feel like this change is kind of a
red herring.
Yeah, right. But I don't know what fine print is involved with that, because I don't understand, honestly, how the property value can be up to $2 million. Maybe that's because with the increase of putting the suite in, if that value then increases, it will, of course, but it can't go above $2 million. So
there's certain legislation that comes in that, honestly, folks, it looks interesting on paper, and then we kind of ignore it and don't spend a lot of time on it because we realize it's actually never going to get used.
Yes.
And so this is twigging for me. Yes, there was this idea that you can, oh no, this is not. I mean, there's the ones where you can partner with the government and they will finance a portion of it. That's not what we're talking about here. But there's
No,
there are
it's a
the one
takeoff
where
on that, I feel like.
the one where they'll lend you money to build a rental, but you have to rent it for a certain length of time at a certain amount of money. And when you do the math, it just doesn't actually add up to being a benefit to someone
No,
because they're not able to raise rates. They're not able to profit from the rental, and they're better off actually just doing a regular loan. So
exactly.
again, folks, dive into some of this, but look at the other options as well. And sometimes some of these things look great on paper, but they're just not going to work in real life.
Yeah.
So I haven't spent a lot of time on that one, and so I can't speak to this one with any kind of authority myself.
I have to dissect it more as well. I'm not clear on it. But that will come as, all these changes are taking place. December 15th, I believe, is the date that.
Right. And that's a really good point because you can go and maybe negotiate a purchase right now, and you may not be, until it comes into law on the 15th, you don't want to be doing anything based on, depending on this until at that point.
That's right. Yeah.
Okay. Thank you. So this is the Victoria Real Estate Show with Jen Lowe and myself, Andrew Plank, and Jane Johnston. And we do this every Thursday at 9:30. We welcome you to come back and listen in, or just listen to us on, or watch us on one of the various platforms that this gets distributed on. We always appreciate your input and feedback. So if you like what you're hearing, please do like it. If you want to hear us again, please subscribe. If you want to share feedback, please comment. We'd love to hear it. And if you want to share it with others, just hit on share, and we would love for this to go far and wide. We do this weekly needs and wants with Jane and I, but Jen, do you have needs and wants? Like, what's your perfect client? What do you?
I would say anyone that just wants to explore their mortgage. If you're just not sure about what you have, you just want an unbiased opinion. Does it make, I'm happy to look at your mortgage statement and let you know if it makes sense to hold off, or does it make sense to refinance?
Right.
Yeah.
And do you have like sort of like, I guess, where's your bread and butter in terms of your ideal client? And I don't want to pigeonhole that because folks, call Jen with anything. But what do you find you're doing? Like, what makes you happiest? Helping first-time buyers or renewals?
I
or are you just happy no matter what?
Always happy, yeah. I'd say first-time buyers as well as mortgages that are coming up for renewal and doing a switch transfer. I've got that nailed down with the different types of switches that we can do to get you the better rate. I'm dabbling in private mortgages a little bit more than I used to, but I don't do a ton of that kind of business.
Okay, good to know. So it's available for private mortgages, and they do have a space and a niche for some people where they make a lot of sense. And I guess what would an example of, like, let me try this, but an example of someone needing a private mortgage might be someone who isn't going to qualify for traditional mortgage might see an opportunity in the marketplace where there's maybe their neighbor is selling privately. They know it's a really good price. They want to be able to buy it. They don't actually qualify, but they know that it's an opportunity and they don't want to miss out. So they're willing to pay a higher interest rate for that lower price point. Or is that a good use case? Or
it's more unique circumstances. With private lending, the focus is on the property. So that's the most important piece. You're paying a higher rate because from the lender standpoint, it's deemed to be a slightly higher risk.
Right. We have a question from the audience.
Yeah. All right. I'm getting
SK.
3.61% for renewal from the market for 3-year fix. My remaining mortgage is 528. Yes, 3.61 is a great rate for a 3-year fixed. Yeah, that looks great. That is under the target for where variable rates are expected to go. So that's a good option. What
So in
it
other
is
words,
important to consider as well. Oh,
Mhm.
sorry, go ahead.
Well, so the question here was, is it a good rate or should they go variable? And 3.61 for renewal, you're saying sounds like it's better than going variable at this point. But
Yes.
sorry, you were saying further to that?
One more thing is that is there a chance that you'd be looking to get out of your mortgage prior to the maturity date? As if fixed rates do start rising, there's a possibility that your penalty could be significantly higher.
Right.
So you just got to balance that out as well. In that sense, it may be better to go with the variable.
So that's the holistic view of it, where yes, on the base numbers, 3.61 is great, and for the 3 years, but what is your 5-year plan? What is your 10-year plan? And are you going to be making a change that, or within those 3 years even, that could cost you? So look at the big picture. Okay. All right. Thank you, SK. So needs and wants for myself. I've helped a lot of buyers and sellers recently. I'd sure love to get some buyers out into. SK says, awesome, thank you. You're welcome, SK. And love to get some buyers out to my new listing out at Citadel Ridge. It's a beautiful townhouse with master bedroom living on the main, and really high quality finish in floor heating, radiant boiler heat. And just a great location out there near Royal Bay. I have buyers for a house up to 1.3 million, preferably with a suite at that price point. And the Esquimalt area would be great, but anything in sort of the Victoria core is what we're looking for. And also looking for some starter condos, starter condo townhouse. Love to find a starter townhouse under 550, which is probably a unicorn in the West Shore. They do exist. I looked up. There were 3 that sold in the last year, but that's only 3 under 550,000. And yes, they're going to need work and they're going to be in an older complex. But we're looking for something like that, as well as starter condos for people looking for something for their son and so forth. So that's where we're at. So that's it for me. And anything you want to add or wrap up here with, Jen?
Well, I'm just it's nice to have some positive news in our world, because this last year has been tough.
Mm-hmm. Yeah.
So it's great. I'm excited that my clients are paying less interest, those variable rate mortgages. So it's nice.
We sometimes I think in this business we sometimes take some of our personal value from how we're doing for our clients, and it's harder to do well for our clients when the markets are against us.
Yes.
So we can take it personally, and our attitudes and our temperament and everything, not temperament, but how we feel in the world can really be affected by what's going on out there. So
it's nice
when we can be doing well.
Yeah, when okay, well, how much is my mortgage payment going to be? And I just I don't know.
Yeah.
I don't want to say it.
I don't want to tell you.
So and that's getting better. So it's just all around positive.
Exactly. In the same in our business, where you just, I'm sorry you lost out on yet another offer you made because there were 6 offers presented and yours was somewhere in the mix. Or I'm sorry you're not getting offers on your property because the buyers are just not out there for this.
Right.
You do your best, but it's always nice. I mean, we don't need to have it easy all the time, folks. We We don't want to have it easy. We love a challenge, but some markets are more challenging than others, and it can just really impact everyone. So it's nice to be feeling like the tide is rising again.
Exactly.
Okay, everyone, thanks again for watching. Jen, thanks for being here and showing us all the good stuff. I'm going to hit end on this, and we'll see you all. We'll see you next week, Jen. We'll see Jane next week, and we'll see you all next week. Thanks, folks.
Thank you.